Okay, good morning, guys. A very good morning to each and every one of us. I see, a few names that I can remember. Kingdom Financier, Barrister, Bucci, Stephanie. I see all of you. Thank you for joining as always. Um, as T and Chats, and this is our ninth episode for the year of T and Chats. Ninth episode for the year from T and Chats. And today we are looking at something, you know, um, very technical, and at the same time, it's something that we can discuss about. And it's the theme is, market seasons, basically, and how they affect our technical analysis as traders. Okay, and why it's very important for me is a lot of technical traders do not understand this thing that we're going to be talking about today, especially when you're a newbie or you're just getting your feet soiled up in the mud. You really might not understand it, but I hope today we're able to open it up and let you know. You see, a lot of traders come into the foreign exchange market and they just think technical analysis is technical analysis at every point in time. And the truth about it is seasons affect technical analysis, and you can debate it anywhere, and there are a lot of proof to show you that they do affect. So let's take, for instance, we have 4 quarters in every financial, in every fiscal year. Okay, we have first quarter, second quarter, Q1, Q2, Q3, Q4. Now, remember that the foreign exchange market is not really as how would I say it? It's not really just you and I. It's not just retail traders. Remember, we said we have institutions, we have companies, we have banks, we have hedge funds, and all of these people are in this market as well, trading the market actively, wanting to make profits off the market. Now, there's a part of it that people just tend to forget, and we just tend to look at, this Forex thing as it's just candlesticks, it's just them, candlesticks and NFP. But we fail to understand that the same way these companies have a fiscal year where they have different goals to achieve and different financial targets to meet at every fiscal year, is the same way, in every quarter of the fiscal year. It's the same way they approach, how they tend to want to make their profits and all of those things at the same time. Now, this in turn as well also affects the market. Now, not only does that affect the market, is even the banks themselves are, they're also an institution, and they have different, goals they set aside for every quarter. Now, this affects the market too as well. So sometimes you notice that, probably in Q1, you notice that the market is slow. The market is in probably maybe like, an accumulation phase. The market is just ranging. You can clearly see that for you open your 4-hourly chart, you clearly see that you're stuck within a higher time frame supply and demand level, and prices have just been in that range for a while. And then all of a sudden, at the start of Q2, you notice that prices just expand out of that range, and the market starts trending properly again. You start to get your break and retest, support resistance respecting. The market is trending aggressively to the upside, and it's heading, probably to a much higher time frame, or is looking for a true liquidity to go and sweep or something. And then once that happens, we come into Q3, okay? And then you notice that the market slows down a bit. Not that it's not ranging, but the markets are not as fast as they were in the first quarter or the second quarter. But the market is trending. It's just slower. Candlesticks are not as large as they used to be. Something is happening. Now, it is volume. If there's a reason, if for any reason, volume decides to reduce, probably, these banks are not seeing a reason to, pump money, they are not printing enough money, economies have cut, spending, they've also cut their money and how they are printing money at that particular point in time. Things like that can affect the market for a certain currency pair, probably Euro US. Let's take, for instance, gold. one of the major reasons why gold was aggressive, okay, one of the major reasons why gold has been aggressive since the start of the year, as we all know, is because of what? Is because of the fact that everybody was running into safe haven. First, starting from the US election from last year, people started running into safe haven. When Trump came in, Trump started to, talk about tariffs and everything. Now, when the market is in chaos, the one thing that a lot of people run into is safe havens. Even the banks themselves, they start to buy gold very aggressive because they are all looking for a safe haven, because they need to protect people's money too as well. So if you're an investor, or you've invested a certain money with, probably with an investment company, with an investment bank or something, whatever the case may be, they need to protect your money. So they start to run into safe havens. Why? Because gold is a hedge against inflation. You get, gold is like protection for them. Because at the end of the day, no matter what the price of gold is, by the time they sell it, they will be able to, piece by piece, make back your money and give you your returns in one piece. Okay. So now, that being said, is the main reason why there's a need for technical analysis, traders to understand that seasons do matter. They affect how the market would operate, and you need to be confident enough to study and watch and backtest and view. In times of war, what happens? In times of economic distress, what happens? In times of an inflated economy, how does the market react? In times of a stagflated economy, how does the economy react? In times of election periods, inter-country crisis, how does the economy react? All these things are things you need to pay attention to as well, and you need to learn them. Now, I'm not saying you have to learn them immediately, but in your journey and in your process towards growth, these are things that you have to consider. And this is the beginning of our topic for today. And today we have with us the one and only JOMAREX World. He doesn't use FX. I think it's too cliche for him. So he's the founder and CEO of JOMAREX World, and he's a foreign exchange trader, not just on the charts, but also, in terms of currency exchange. You want to change your crypto, you want to change your dollar fiat to naira, to rand, anything. He is that guy that you want to go to. Thank you so much, JOMAREX, for being a part of TN Chat and honoring us with your presence today on TN Chat. JOMAREX, if you're on the call, please can you unmute yourself and just say hi to the community, introduce yourself, and just give us a rough background about your trading timeline in anywhere between 3 to 5 minutes.
Hello, please confirm if you can hear me. Hello?
I can hear you, JOMAREX.
All right, thank you very much. And I really do appreciate you for having me. And I must say
Hello? JOMAREX, can you hear me? Yes, can you hear me? There's noise coming in from where you are.
Okay.
There's a lot of noise coming in. Yeah, it's better now. There's no noise. There's no noise now. It's better now.
Better now, right? Okay. Thank you. And I really do appreciate you for having me. And I must say it's an honor, having to share what I have learned, with you all today. And I must say, Ryan is someone I really do much respect. He's someone who has vasted his knowledge as regards the FS space. So I believe one of the most overlooked, I call it edges. Okay, one of the most overlooked edges in trading is seasonality, and I'm super excited he actually brought, this same topic so that we could, meet minds together. I believe in learning from everybody. If anyone has, one or two perspectives to share, because I have my own perspective, and same with other persons. So many traders do great when it comes to, technical analysis, but when it comes to the application is where there's always a problem. So for those who do not know me, my name is Joseph Makonjola. I'm also known as JOMAREX, and just like the host rightly stated, I'm also, not just a forex trader. I'm into cryptocurrency. Just in case you want to buy or sell your crypto coins, I'm always active for that. No matter the quantity, I'll sure to make it available for you. Okay. So and today I'll try my best to see how is it that I can walk you all through how, understanding, seasonalities in forex markets is very, very important. I heard when Ryan said something about Q1, Q2, Q3. I think we have Q1 to Q4. So these are some of the things that would help you to improve. And I'm going to list out the areas for those who are actually following. It would help you improve when it comes to your risk management, your technical hedge, and when it also comes to profitability. Because trust me, if you can have a profound knowledge as regards seasonality in the forex market, it would help you to be able to make informed decision. And funny how I've actually done my own personal research when it comes to seasonality, I think sometime last year. And I think I did a renewal of that this year, early this year. So it is something that I do understand. That is why whenever I trade gold, once I see an opportunity, I tend not to unsee it, because trading reflects your attitude, your character, basically. So if you've been able to, if you're conversant with the moves in the markets, if you're conversant with the seasonalities in the market, it would help you to be able to properly, manage your trading. All right. I think that is going to be all for now. So as time progresses, I'll get to share, further what I have for you all. Thank you very much, Ryan, for having me.
Thank you. I want to be sure that my mic is on. Just give me a moment. Okay. Thank you very much, JOMAREX. I really do appreciate the intro. So JOMAREX, we have a structure to how TN chat operates. Okay, we like to keep it under 45 minutes so that it would be easy to to view for people on YouTube, and also when you go back to it, it's not too long. Okay, and so we have like different segments of it. Okay, so we have understanding what exactly the topic is. Then we also want to know how it impacts traders. Then we also want to just talk about you sharing like practical examples of how you would approach things like that. And then we might want to take maybe one or two questions, okay, from the audience. Usually they would leave the questions in the chat section, and that's going to lead us into that. Okay, so for us to start, I would want to ask you the question. So probably you define it for us in your own term, although I started the introduction already. But what exactly would you say are market seasons? And how would you define market seasons, and how would you say they behave during certain seasons? You're still muted, JOMAREX, just in case.
Oh, thank you very much. Okay, so I do appreciate the question. It is very, very simple, traders. When we're talking about seasonality in the forex market, it can be taken as let me use the word predictable patterns. Hello, predictable patterns in the sense that there is how the market operates, that once you get the pattern of the market, for sure, okay, there's high tendency that the market would repeat itself over and over again. Perhaps we could say over specific periods in the market. And that is how I see seasonality. So it's called the power of repetition when it comes to chart pattern formation. So that is why we have it. It's actually divided into, I think, just like I rightly stated, we have 1 to 4. That's Q1 to Q4. So we have the monthly, we have the quarterly, we have the yearly, and I'm pretty sure that quite a number of us, we are conversant with this word ranging market formation, okay? Because there are times when you would see markets ranging for a specific period of time. And funny how is it that some traders tend not to spot the seasonalities, and at the end of the day, they will be making uninformed decisions. So the market. See, if there's ever one rule that you need to take away, is that the market is not the same forever. That's just the truth. The market is not the same from January. It is not the same in August. It's not the same in November. It is never the same in December. We understand that price movement is, fractal. Price moves in waves. There are some times that markets will just give you a consolidation pattern for a very long period of time. There are times that once you observe the chart, depending on the type of financial instrument you get to trade. I personally, I trade gold, and I've gotten used to the move that when I see some certain moves, I don't waste time. I just stack. I love stacking, okay? So there are periods that I stack. There are periods that I don't stack. So it's about you understanding the current situation or the market condition before you make your decision, because we have different factors that affect the market. We have the liquidity, we have volatility, as we all know. We have, so many others. I'm talking about sentiment, okay? That is, what's it called? Trader psychology, okay? Is the institutional positioning. Ryan actually talked about that. We have different market players in the forex market, okay? So you need to observe the condition of the market. Understanding the quarters would help you. So if you have this type of trader, I personally, I don't have one strategy. My strategy is all encompassing in the sense that it's a simplified approach to trading. So my strategy can work with any market condition. Because let's say, for instance, if you are a swing trader, there are times that if you are not careful, you might actually not get to see what you're actually looking for in the market as a swing trader. The market might not even print the price action formation you want. So once you understand that, what do you need to do? You need to readjust your system to suit the current market condition. It means you're very, very wide. But having to force your system based on the current condition of the market, and you know fully well that this strategy might not work at this point in time. Are you doing yourself good or bad? Of course, you're doing yourself bad. So what you just need to do is to reevaluate yourself, observe the market condition. What type of strategy do you explore? If you see that your strategy is not working at that point in time, the only thing you need to do is what? To refine your system. So that is why I talk a lot about reposition. Okay, as a trader, you need to reposition yourself. Market opens with different volatility. Institution, they adjust their portfolio. See, we have so many factors. Retail traders, there are times, especially people who trade ICT. There's what we call the OTE, optimum trade entry, and I think we get OTE most times during ASAN session. So there are times that the market will not give you what you want at your area of interest. So the question is, what do you do? Once you've observed it, I said something about the fact that seasonality in the forex market simply means what? Repetition, okay? What you've observed, the predictable patterns and tendencies that markets would repeat itself over a long or short period of time. So once you've observed it, what you just need to do is you need to reposition yourself. Let's say, for instance, Q1 calls you to repositioning, and Q2. When I say Q1, it means first quarter, second quarter. Do you understand? So Q2 is calling you. Let's say, for instance, I've observed this particular one. I think it was around January. From January to March. For those who observed the market very well, there was a lot of breakouts, and we also had, series of new trends in the market. So there are some traders, they were just looking for a continuation pattern. There's a difference between continuation pattern and a breakout pattern formation. Do you understand? So I observed over time, and please, just like I rightly stated, it depends on the kind of financial instruments you trade. I trade gold. So gold over time, that January to March, that's Q1, yes. That January to March, I observed more good time for breakouts and even new trends. And that is why gold during that period, it was giving us more of like a breakout formation and all of that. So I was able to take good advantage of the market condition. So Q2, we are about to enter Q2. I think Q2 is from February, March. Okay, April. We are currently in Q2. Yes, it's from April to like July. Okay, yeah, from April to like July. So you need to observe all of these things because from what I've observed so far, Q2 has been given more of reversal formation on gold for those who have actually observed it very well. So why am I telling you all of these things? This is to tell you that I'm not just talking because I want to talk. I'm talking based on experience and what I've actually observed over time. Okay, so it's media. So you need to be very, very observant and try as much as possible to balance everything that needs to be balanced so that you don't get trapped. Okay, there are times, I think there are periods where we had more of stop loss ons. Hello, I think it's actually happening on gold currency. We can see series of stop loss ons because you need to understand the fact that the market is designed and wired in such a way to always take you out. So once you've understood that concept, you should be aware of this, that if you're actually taking a buy or sell at a point, the rest assured that there's high tendency that the market might engineer liquidity against you before the final move. I don't know if I'm making sense. So these are some of the vital things. Okay, there are times we have crazy pullbacks in the market. We have different types of pullbacks. We have the deep pullback, we have the shallow pullback. These are some of the things you need to observe. Okay, and most importantly is the end of the year. You see, they tell you, okay, during Christmas period, even December, there are traders telling you, I mean, there are some mentors out there, they'll tell you, oh, don't trade because we will have, low volatility in the market. So these are periods where you need to pay attention to to the momentum and how market drives, what's it called? How market drives liquidity. These are some of the things that will help you make informed decision. And I'm not going to fail to mention this because I think this is actually one of the majors as regards this topic. And what is the effect? Does it affect technical analysis? Now, believe it or not, I believe quite a good number of us can attest to the fact that there are periods where you have more wins. Am I right? There are periods where your losses outweighs what your wins. And it's not as if your strategy is not working. Am I communicating? It is basically because you've not been able to get a full glimpse of the condition of the market. So when you are trading, you constantly work with that same strategy and hoping that soon and very soon you get to make the big buck. Whereas you are lagging behind. You are trading blindly because you've not developed a profound knowledge as regards the current condition of the market. So it's just as if a trader is swimming in a pool of confusion, and at the end of the day, you are robbing yourself of the profit that you ought to make from the market. And before you know it, it's just like you're moving zigzag. You don't even have the direction. So T here doesn't have the same, your one strategy doesn't have that same reliability over the year. I don't know if you get that. It simply means that your strategy, the one strategy you're using, you can't. There's that tendency that it cannot be reliable for a whole year. At some point, some things will start, playing out in the way that you do not want it. And that is why it is very, very important that you observe the market conditions. So trading is about consistency. Okay. Seasonality is a sweet spot if you can actually understand it. It is a sweet spot for you to be able to leverage on our rights. Okay. So I would also advise, please, if you are this type of trader that you trade without checking through the fundamentals, you just feel like, oh, just your TA, you are missing a whole lot. Because fundamental analysis would help you to stay above lots of traders. It's absolutely an edge. Because if you have the full grasp of what is happening fundamentally, it will help you to be able to make the right decision for yourself. Now, I haven't gotten the bias on, for example, GBP/USD. You know, GBP/USD is going to sell, right? And you've checked your DXY, and your DXY is screaming bullish. Okay, it invariably means that, of course, when you want to take your position, when you want to take your order, rather, you're going to take a sell on GBP/USD. Yes, you've been able to build a good confidence as regards that. Now you're trying to build another confluence. And the other confluence is that fundamentally, your DXY is what? Is bullish. It is strengthened. That's another plus for you. Now, do you see how you are trying as much as possible to refine your entry? So it's not just you, okay, you just have your TA, you've checked your order block, you've checked your FVG, you've checked all of it, you've checked your breakout block, all of those terms. You've gotten everything. You've even highlighted it on your charts. But are you trying as much as possible to stretch yourself to build a good, profound a strong confluence, having to check your fundamentals, understanding the seasonality. It's very, very important that I emphasize more on the seasonality because that is the major focus of our discussion. So I want you to ask yourself this question. You could actually pen it down. Is quarterly, let's say, this is month. We're about to enter a new month. Now, before we enter the new month, you could actually do this thing for yourself. This, let's say, for example, okay, we've gone like 1 week already into the new month. I'm taking for instance. So you need to ask yourself this question. Is this current month, okay? I'm not using quarter right now. We are currently in Q2. Is this current month for volatility or consolidation? Now, you would observe there are times the market will be given a ranging market formation, and you're looking for either an uptrend or a downtrend, depending on the condition of the market. But then what you are seeing is a ranging market condition. Do you think it's going to work for you? No. And that is why, as a trader, you need to be patient. That is what seasonality would also help you build. Patience, because you understand your environment. You understand what's up in the market. And the other question I would like you to pen down is, are institutions trying to reposition? I talked about repositioning. While you're also trying to reposition yourself, I'm almost done. While you're trying as much as possible to reposition yourself, mind you, the institutional traders are also trying to reposition themselves. Do you see the battle? Then the last one, is your technical analysis performing differently? You've been using your TA and you've been observing, oh, this thing is not just doing what you want. You're very, very observant. Ask yourself these 3 questions. Is it performing differently? Is it giving you what you want at that point in time? So in case you do not know, I'm going to be listing out the different things that pro traders do. If you are still struggling, if you are still finding it hard to see how is it you can harness all of these things together, yes, they will not get for you. I'm not telling you to do this because pro traders are doing it. I'm telling you to pen them down to see how is it that you can carve out a niche for yourself. I don't do what people tell me to do. I learn from their experience. I hear, I listen to them. I take back home lessons and ensure that I pen them down and say, is it I can actually carve out a niche for myself? And that is how you grow. So what are those things that would help you? In case you do not know when to pause and know when to push. Am I making sense? I'm going to be giving you guys three, just three. Know when to what? Know when to pause your trading. Know when to what? Know when to push. The second one, don't force trades. It is societal. If your strategy is not working at that point in time, during that period, you need to reposition yourself. And the last, ensure, see, this is the greatest. I call it the greatest because it's something that would help you to be able to build a sound system for yourself. If you are still at that building stage, okay, study your yearly. It's not going to even take you time. I do it all. Study your yearly and your monthly performance. Hello, study your yearly and your monthly performance. And the last, yes, I just remembered this. Please, if you are this type of trader that once the month closes, you don't even check the monthly candlestick, please, you need to revisit it. See, start doing it. Look at the close of monthly. Look at the close of your weekly candlestick. These are the pace setter for every month, year, and so on. So you don't want to trade blindly. Just see it. See, if you do not check all of these things, you don't understand market condition. It's just as if you're trading blindly. It seemingly means you're trading blindly. And you don't want to subscribe to that for a very, very long period of time. So please, trading, it is a risky business, just so you know. And I believe each and every one of us were informed about this. But while understanding the risk factor, it is very, very important you also understand the seasons. It's like you sailing without checking the weather, and you just want to go out that way. Does it even make sense? You don't even know, okay, let's say you step your foot outside and you observe the weather condition, enter, then you're not doing yourself very good. And I'm going to conclude with this. I'm not telling you that once you get to know the seasonality in the forex market, everything is going to go smooth sailing for you. JOMAREX is not telling you that. But what I want you to ensure that you take note of is when the storm hits, or no matter when the storm stops, one thing you need to do to ensure to always do is be observant. Let's stop trading blindly. Let's make our informed decision and also trade smart into profitability. And I believe if we put all of this that I've actually said, seasonality when it comes to profitability is not going to be far from us. Thank you very much, Ryan, for having me.
Very much, JOMAREX. Thank you so much for having broken it down in that manner. I mean, you went through the technical aspects of even explaining the seasonalities. I heard you talking about OTE and OTCs and all of those things like that, which I believe are like an eye opener from I think ICT concepts also. And I want to say thank you for also sharing that. So okay, next thing on on our agenda is I believe you already attacked two things already: the impact that seasons have on traders, and you already spoke about market seasons. So I just want to ask a few questions, very short questions. How would you say that a technical analysis trader can apply their understanding of seasons onto the chart? I don't know if you're connected with your laptop, so maybe you could share your screen with us and show us an example of maybe a seasonal back test you've done previously before.
Oh, I'm not with my laptop at the moment. I'm really
Okay.
sorry about that. Yeah.
Okay, no problem. And that's fine. Maybe you could send us a short clip so that we would be able to watch it after that. Thank you very much. Okay, so another question that
You're welcome.
yeah, so another question that I have as well is, what do you consider the most dangerous season for traders?
Hmm. Thanks for question. I'm trying to reminisce um on which quarter is the most unprofitable quarter for most traders. Now, from my own experience, Q1 basically, it's actually tries as much as possible to find its way, through the end of the holidays. We have Easter, a whole lot of holidays and all of that. So during Q1, we have institution, investors, and we have also new sentiments coming on board. So Q1
Uh,
is just like uh, a starting process. And there was one video I watched. One of my mentors made mention of the fact that it is called a recalibration. Okay, it is a
okay.
year that sets. It is a period. Q1 is a period that sets the pace for the year. So now, the most dangerous that I can say is from Q4. Yes, that's October to December, because during those times we see institution trying to meet their yearly target. We see portfolios being adjusted, and during those periods, what do you think these people are trying to do? They are trying to see how is it that at the end of the year they are profitable. They want to end the year profitable. So now they engineer liquidity to their direction most times because they are closing for the year. So they take advantage of opportunities during Q4 better than what traders. So the period that can offer some sort of clean technical, play out is during Q1 and Q2. But you see from Q3, okay, Q3 to Q4, basically Q4, we have, price actions playing roughly and all of that. So I would say Q4.
Okay, thank you very much.
Yeah, and sorry, I would also love to mention, because I love to bring a balance. Now, I need us to understand that each quarter it has its own rhythms, okay? Or let me use the word lyrics, okay? So it is not about it is not about which one is best, or it is not about which one is the most unfavorable one, but it is more about which one aligns with your own strategy, and how well is it that you can be able to make informed decision, or how well you've been able to learn to adapt to market conditions. I hope I made myself clear. Thank you very much.
Yeah, thank you. Thank you very, very much, Jomarex. I appreciate your time and being present with us. I just have one last question, okay, just to round it up.
All right,
Okay,
sir.
and in in talking about seasons, yeah, should traders reduce their risk or just adjust strategies during changing seasons? Let's take for instance, probably maybe during they get into a season where the market is fast paced or slow paced. Do you think they should be more focused on adjusting their risk, or should they be more focused on, becoming more what's the word? More adaptable through their strategy?
Okay, that's a beautiful question. I'm going to start with this. Uh, I believe traders shouldn't just reduce their risk. It is very, very
Okay.
important. It is very, very important that the best thing a trader can do for himself or herself is to adjust their strategy to the season they are currently trading in. Because no matter how you can actually adjust your risk to reward ratio, what you're looking for at the end of the day is to be profitable. So if your strategy, imagine you're just trying to manage your risk and then you're suffering with your strategy, then you cannot get what you want. So at the end of the day, your strategy should be your major focus, because there are times when the market is choppy. There are times when we have low volume in the market, like holidays or major news that we're actually experiencing at the moment. So in seasons like that, reducing your risk and being more selective would only make you trade wise, and you would see it as being wise. But in a clearer perspective, or in a clearer seasons, like let me just say Q1 and Q2 period, it would even make more sense. Even let me just use from Q1 to Q4, it would make more sense when you lean more on refining your strategy to suit the current market condition and not just having to adjust your risk management alone. Thank you very much.
Okay. Thank you very, very much, JOMAREX. I want to say a very big thank you. To those of us listeners who are on the call, we have about 3 to 4 minutes left. So please, if you have a question, just ask the question in the chat group of the Academy's Telegram quickly. So that we can have a quick answer, okay, of your question. If you do not have a question, then we might call it a close. Well, I'm just going to give about a minute because I believe you might be typing. So if you have a question, please just ask your question. Okay. Okay, so we have 1 minute gone already. No question yet. Okay, thank you guys very much for being in attendance, and I hope that each and every one of us were able to learn too about seasons. And as always, I would always say this thing: my topics are not just one topic; they would always be revisited. Okay, because people have different approaches to the market, and that's one of the most important thing about the foreign exchange market is it's not one approach fits all, because two people could see the same thing but from different angles. You get what I'm saying? So we're also going to have a retouch of this topic again, and we're going to have another guest come share their perspective and their light, hopefully in subsequent episodes to come. Thank you very much, JOMAREX, for taking out your time again to come share your knowledge and give us a piece out of the basket and wealth of knowledge that you have, and we're very much grateful. And as always, guys, I'm going to post this on YouTube, so you can get it on YouTube in case you want to digest it again. And thank you guys for joining, and sorry we couldn't have it on Monday. Our guest was in transit. I believe I explained that. And until the next episode, which is next week, I'll see you guys tomorrow, which is our mid-weekly session. And if we're going to be trading any news, I would give us an update about that. And thank you guys for joining. It's Ryan for a reason, baby. Bye, guys.